The US dollar is flexing its muscles as the first quarter draws to close. The US currency is once again winning the race against the Japanese yen, Swiss franc, and Chinese yuan. In addition to developments around the major economies, the US dollar index is being boosted by slightly more hawkish comments from Fed speakers. Against this backdrop, the euro climbed to around 104.30 on a Wednesday, nearing a 6-week high. Meanwhile, traders are awaiting the release of the US PCE price index. In our video review, we will discuss which macroeconomic releases will have a key impact on the market. You are watching the Traders Calendar. On the Thursday, markets will get a glimpse into the state of the world's economies. The United Kingdom will kick off the series of releases. The British pound slumped to around 1.26 amid slowing consumer spending and the hints of a possible interest rate cut this year. Although Bank of England board members have tried to reassure markets, suggesting that bets on the number of cuts in 2024 are overdone, and the pound has reacted weakly. The final estimate is expected to reflect a 0.2% contraction in fourth quarter 2023 GDP, consistent with a view that the country is in a shallow recession. In addition, analysts have been warning for some time that the UK economy is likely to remain weak this year. Given the overall picture, we do not expect the data to have much impact on the pound-dollar pair, but if the report does not meet forecasts, the pound could get a short-term boost to strengthen or weaken, depending on the numbers. Canada will continue the economic health survey in the US session. GDP data for January and a preliminary estimate for February will be released. The Canadian dollar is not in the best shape right now, depreciating to below 1.36 against the US dollar in March, hitting an almost 4-month low. Adding to the intrigue is the fact that Bank of Canada Senior Deputy Governor Caroline Rogers said that businesses urgently needed to increase investment to boost productivity, adding that this would help insulate the economy from the threat of inflation. Thursday's data is expected to show that Canada's economy expanded by 0.4% in January-February. February's advance estimate will also be important. If the data points to growth in the Canadian economy, the loonie could strengthen, while signs of a slowing economic growth could put pressure on the Canadian dollar. US GDP data will be the most important, and the report on the US durable goods orders beat forecasts. Business spending on equipment showing tentative signs of a recovery, and the consumer confidence held steady, reinforcing the view of a robust economy. US economic growth is expected to have slowed slightly in the fourth quarter, but less than initially estimated, which bodes well for the near-term outlook. According to the preliminary estimate, GDP grew at an annual rate of 3.2% in the fourth quarter, down slightly from the previously reported 3.3% pace and the 4.9% rate in the third quarter. The downward revision was driven by private inventories, while consumer spending was revised up. Including all of 2023, the US economy is expected to grow 2.5%, up from 1.9% in 2022. If the data is in line with the estimates, the dollar could continue its winning streak, as it would in the future beat expectations. A weaker growth estimate could put pressure on the US dollar index in the short term. Another report from the United States that could affect the US dollar index momentum is the unemployment claims report. Companies are not laying off workers, and the labor market remains relatively strong, making monetary easing more problematic at this stage. This week's claims are expected to show a modest increase of 2,000 to 212,000. Claims have mostly hovered in the 200 and 213,000 range since February. Against this backdrop, a sharp change in the index could boost the US currency upward pressure on its as it would potentially indicate a weakening labor market, while a sharp decline would be bullish. The main event of the week will undoubtedly be the release of the Personal Consumption Expenditures Index, the Fed's preferred inflation gauge. However, before we begin our analysis, traders should take into account the fact that many markets will be closed on a Friday due to the Good Friday holiday, which means that trading volumes may be very low. The core personal consumption expenditures price index, which excludes volatile food and energy, is expected to add 0.3% in February from 0.4% in the previous months. Annualized core inflation is expected to be unchanged at 2.8%. Notably, the Fed raised its inflation outlook, forecasting that the PCE index, excluding food and energy, will rise 2.6% annualized by year-end, up from 2.4% in its December projections. And a hint in the data that inflation is perked up could dash hopes that the Fed will begin easing soon, as the pause in monetary policy changes is likely to continue. According to the CME's Fed Watch tool, traders see at least a 70% chance that the Fed will begin its easing cycle in June. An unexpected uptick in inflation could potentially dampen market enthusiasm for an early rate cut and strengthen the US dollar index. In addition to the PCE report, the market will get a look at the change at the personal income and spending, as well as hear Jerome Powell speak later in the day. Any of these events could affect the momentum of the US dollar index and the volatility of the underlying major pairs. This was a brief overview of the most important economic events from InstaForex. Follow us and make hefty profits from your trades. So see you online soon.